Good morning, clients of Alpha Morgan and the general public. I will have to share my screen with you, if you don't mind. So I need to share screen. Okay. Okay. Now, ladies and gentlemen, this is the last, I think the last day but one of the second quarter of 2021, and also the last day but one of the half year of 2021. It started so soon, but because of COVID, we didn't realize that the year could run so fast. In any case, today, because Alpha Morgan, a leading and dominant player in the space of asset management and investment banking services, I'm going to focus mainly on what are the major concerns of investors. Before we go to the presentation proper, I think there are 7 major concerns of investors. Number 1 being the security or the value of the money they have invested. How do we protect the value of our investment? 2, how do we create wealth? In spite of everything, you need to create wealth because the generations coming after you are going to be more than the generations before you. Now, thirdly, Mr. Buraimo just mentioned it, is that inflation is rising and the value of your portfolio by implication is eroding. Cumulatively, in the last 3 years, cumulatively, we have lost over 60%, or 4 years, over 60% of the value of our money. In other words, we lose money by going to bed. That's from inflation alone. Thirdly, our currency, the Naira. The value of the Naira against the dollar is down over 45% in the last 3 years. In fact, more, depending on what exchange rate you are using. Interest rates are sharply lower, so the real rate of return has been negative, no matter whether you put it in treasury bills or whatever instruments in Naira. Equity prices in the stock market, which was the compensation for other losses, have also tanked. This year we've done almost minus 7% so far. The other concern you have, how do I deal with government and policy uncertainty? Today is this, tomorrow is that. We have no clarity. And finally, what will the African Continental Free Trade Area Agreement do to the companies and stocks in my portfolio? In other words, if for any reason I bought the stock of a company, for example, if I bought Dangote Cement, and Dangote is being given an award in Cameroon, and Dangote is selling things in Senegal and doing that, that may be good. But if I bought the equity of a company that under the rules of origin may not be competitive, that stock may suffer. So those are 7 major concerns of investors, which I wanted to put on the table. And the presentation we have is going to try to address some of these concerns. So let us start very quickly because we don't have too much time. We're going to be looking at the investment environment, both global and domestic, and I'm not going to waste too much time on that. And I hope you're seeing the slides, ladies and gentlemen.
Yes, we can see the slides.
All right, thank you. Now, the global investment environment, one can say clearly, the global investment environment is more friendly now than it was 6 months ago, when we're in the peak of the pandemic. The global equity markets have been on course for a 5th straight month of gains. In other words, if you invested in global equities, especially in the US, you are making much more money than you made maybe in November, December last year. Investors continue to keep faith in robust economic recovery, but something is happening. Even though the stock market is increasing, what we are seeing is a greater trajectory, a faster trajectory of increases in equities that are internet and technology driven. In other words, the Facebooks and the Googles of the world. Yeah, this morning, I think last night, it was announced that Facebook is now crossed the $1 trillion market capitalization level. Why did this happen? It happened because the courts ruled that Facebook, somebody had gone to court that Facebook should be forced to sell WhatsApp. And the courts ruled that the acquisition of WhatsApp was done almost 12 years ago, or something like that, some years back by Facebook. And therefore, it is too late in the day to ask them to. And in any case, even if they sold off and they spun off WhatsApp, it will not stop them from having a dominant position. Facebook is alleged to have about 2.3 to 2.4 billion Facebook providers. But if you add WhatsApp users, then it comes a multiple of that. So there are only 8 billion people in the world, including children of 1 day old. So if you say that the bulk of humanity that can use the social media are probably 3 to 4 billion, so they have almost 100% coverage. So that tells you, and these were companies that were not in existence 30 years ago. That is Facebook. The same thing is happening to Google. The same thing is happening to Apple reincarnated. So you'll see that surge. But again, another thing that we're seeing is a recovery in the brick and mortar business. We've seen recovery in renewable energy. We've seen recoveries and strength in some other areas. The US Fed has done a stress test for, I think, about 36 banks in the US, and all of them came out very well in the performance. What it does mean is that the US banks are able to declare dividends again, because they were stopped from doing that in the last 2-3 years. They're able to buy back their shares, and they're able to lend aggressively to fuel and catalyze the recovery, the global recovery. So we are in an environment of global recovery. We are in an global environment of higher inflation, but the rate of growth projected for the United States economy this year is about as high as 7%, while inflation, even transient and structural, is not likely to go above 5%. As a matter of fact, they believe that in the next 2 months, inflation will come right back to about 2.5% in the United States. So if you compare 2.5% of inflation increase to 7% GDP growth increase, you can see that the global economy, especially the US, which has 25% of global output, is on a path of stable and accelerated growth. There's another thing which is said, a consumer-led revolution is taking place. Wealth managers are looking the other way as clients bet on cryptos, and many investors see crypto as a store of value. So I'm going to spend a few minutes on crypto as we go along, because you as investors must be asking yourself, what is cryptocurrency? What is Bitcoin? Why am I not today? Every day they're announcing Bitcoin dominance, and there's what they call the fear greed factor, which is driving things. And people are wondering, should I get myself into this or not? Don't forget, crypto, Bitcoin went as high as $66,000 only 2 months ago. 3 days ago, it was down to $29,000. But today, thank God, it's up to $32,000. Warren Buffett, the Oracle of Omaha, described Bitcoin as rat poison. Anyway, now another thing you have to worry about, because the global integration of economic activities and after Trump actually cannibalized the global flows of capital, we are getting back again. So the G7 has met. The G20 have endorsed it. The minimum tax, the minimum tax of 15 to 20% has been, as a matter of fact, what they call Pillar 2 and Pillar 1 have been discussed today and tomorrow in Paris. Nigeria is on the table, where the minimum tax is going to be implemented and enforced, I suspect that Nigeria will go along with the rest of the world. What does this mean? It means that oil companies, technology companies are going to have to pay minimum tax. They cannot hide under tax havens and have their headquarters in Dublin or in Sao Tome or in Mombasa, and that way avoid paying taxes. Like I said, a global consumer revolution is taking place. The US Fed is about to, they said for the first time they were going to increase interest rates in 2024. Now it's 2023, and even some people are talking about late 2022. If that happens, the dollar strengthens, interest rates increase, cost of borrowing and cost of credit to third world countries, emerging markets, and others will also change. But it is good that this is happening at a time when there's expanded growth globally. So the question is, will Nigeria enjoy this party? And if so, how will it participate in it? The second quarter, which we are reviewing today, a couple of things are very notable. And you look at this slide, it tells you that GDP growth was 0.51%, but it's fragile and it's actually limping. Interest rates reversed themselves after 2 straight years of artificially low interest rates, but also begin to plateau. So we saw treasury bill rates, which were as low as 1%. The 1-year treasury bill rates went as high as 9.5, and it's just plateauing again. Headline inflation went up for 19 consecutive months before tapering, and the question of the integrity of the inflation data is come up. It's something that we may discuss later on, but core inflation is at 13.15. Core inflation is inflation minus seasonalities and other extraordinary items. The federal government allocation has dropped primarily for 2 reasons. One, tax collection has declined because companies are not making as much money. But more importantly is the fact that the subsidies are eaten into once subsidies, the first line subsidies go, then what is left is what is shared. Another thing that is worth noting is that because the price of oil has gone up to $75, in fact, it's the highest level since 2018. Theoretically and technically, our excess crude account should have increased. The excess crude account, just to give you some dimension, the excess crude account was as high as $22 billion when Obasanjo left the office. Today, it's $700 million, less than $1 billion. So essentially, the excess crude account has been raided, and nobody has explained. And the raiding didn't start today; it started as far back as 10 years ago. Oil production is down, but it's going to increase again, and that's the discussion today. And there's a paper today in the Financial Times where they're saying that the price of oil will stay below $100 for a while, and we'll explain why that will happen. So, in summary, the Naira fell in the private market. Mr. Buraimo has mentioned that. And we'll see why it fell. We've seen our external reserves drop to about $33 billion. However, our external debt in Naira is about 34 trillion Naira, and our total debt is about 34 trillion Naira. And our external debt is quite significant. Contractual debt is about $34 billion or $35 billion, while contractual and non-contractual debt brings it to about $42 billion. The trade deficit has widened, which means we're exporting. Our export revenues were not as much as our import payments. And the stock market, as you all know, has been bearish and choppy, to say the least. However, we've seen it's a tide that doesn't sink every boat. Some boats have actually done better than that, and we'll touch that very quickly. So, what's the outlook? What is the outlook for Q3? We're going to talk about, I've talked about domestic investor concerns, so I'm not going to waste time on that. And the structure of oil markets. You find that in 2018, the rest of the world produced 47% 47 billion barrels, 47 million barrels, right? The total output was about 99.7 million barrels a day, okay? OPEC had 31% of total output in 2018. The US had 10.96, and I think Russia had 10.53. In 2021, due to all sorts of changes, the rest of the world is producing 46 million barrels a day. Russia is producing 9.75, they cut a little bit from 10.53. And the US is producing 11.1, they've increased, while OPEC is doing 34.19. Don't forget, 2018, 19, 20, 21, 3 years. So current oil production is about 7.9% down to 92 million barrels a day. And therefore, OPEC cut 9.7 million barrels. And we've only put back about 4 million barrels. So structurally, what has happened is that supply has reduced, demand has stayed flat or reduced marginally, therefore price has gone up. What is going to happen? We expect that oil demand is going to increase. We expect that Iran is going to bring back maybe 2 million barrels. Venezuela is waiting, cannot wait to put more oil into the market. And then OPEC still has another 4 to 5 million barrels, including Nigeria and condensates. So what you have today is an artificial price, because the characteristic of a cartel or an oligopoly is that you have price leaders and price followers. And it's an imperfect market where you can manipulate prices by using output to determine what the price is. They have no control over demand, but they have control over output and the pricing formula. Okay, so Nigeria was cheating. Nigeria has been penalized, but Nigeria has actually come back. I think they announced this morning, I heard it on BBC, and Nigeria, by coincidence, found some major gas reserve somewhere, which is almost half of what I don't know what happened. According to BBC, there was fireworks taking place and something happened, but I will find out the details later today. So that's good news for Nigeria. Now, this oil position has an impact on our fiscal and external revenues and balances. So, how does this affect, for you out there, you don't care what fiscal policy is, you don't care what the oil price is. What you want to know is that the naira in your pocket, if you want to pay your school fees of your kid, you want to travel, you want to pay for your medical bills, you want to bail out a relative that has been kidnapped. So you are likely to be looking at, and if people want to be paid in dollars or Bitcoin, you are likely to be looking at what is the value of the naira. So what are the things that determine the value of the naira? The price of oil is one. In 2020, the price of oil was $42. Today is $66. And you're asking why, if the price of oil has increased to $66 from $42, why is the naira in my pocket lighter in weight than it was last year, right? And why is the kidnapper not refused to accept naira and he wants Bitcoin and dollars? Those are the things that are going through your mind. Or why should I not invest the dollars? So you are worried because you earn naira and the naira is becoming more and more worthless. By this time last year, you were producing 1.5 million barrels, but now you're producing 1.53. So Nigeria is producing more, the price is higher. However, the naira that we have in our pockets is getting lighter and lighter in value. The balance of trade last year was 15.2 minus 15.2, now it's minus 4.7. So these three variables tell you that things should be better. Things should be better. In terms of trade, the higher that number, the better for you. Last year it was 23.2, today, this year it's 30.2. So why? Why is my naira in bad shape? So the current account balance was deficit of $17 billion last year. It's now a deficit of $4.2 billion. The external reserve last year was $35 billion. It's now 33, marginally about the same. But this is the thing. The remittances in 2019 were as high as $24 billion. Last year, it came down to 16.8. This year, we are projecting, or next year, projecting to go higher. So those remittances that came from your friends and relatives living in Canada, the US, Saudi Arabia, and Britain, and Europe, they brought less money in because they were probably fired or unemployed, or even those who brought money in were sending it through envelopes, through people coming in, and so it never went to the official data. Then foreign portfolio investments, which were as high as $18 billion the previous year, came down to $5 billion. So the gap of the Naira was being supported technically by oil, the balance of trade, but more so by remittances and foreign portfolio investments. When those disappeared, no matter the price, the increase in the price of oil did not increase much and high enough to support the currency at that value. And that is why your Naira is falling. So the next chart on the right tells you, then we compare the price of beer, Coca-Cola, Pepsi-Cola, hamburger, Indomie noodles, Toyota Corolla, Nestle bottled water, loaf of bread, Irish Spring soap, chicken, 1 kilogram of chicken breast, trolley at the airport, evaporated milk, Uncle Ben's rice, and 12 large eggs. I don't know, the eggs are almost the same in size, but in any case, when you divide that by the price in Lagos and the price in New York, we have an average of 490 Naira to $1. And guess what? That's about, within the margin of error, that's about the value that the Naira has in the parallel market. But if you take the FX window of 411, which is the official rate, you find that the Naira is overvalued by 19%. The central bank governor said categorically that he does not believe that Naira is overvalued by anything more than 5 to 10% for now. The IMF believes that the Naira is overvalued by 18%. Our empirical data or anecdotal data, you may call it whichever, is showing 19%. So everybody is agreed the fact that Naira is overvalued, and the reason is why. Okay, and I've explained that already. So when you know that, you now begin to look for investments. Any investment that can give you more than 19% return will compensate you for one, inflation, right? And possible erosion of the Naira. So if you are looking to buy a stock, let me say, for example, Dangote Cement, revenues grew by 33%. Therefore, technically speaking, all things being equal, you should be able to give you a return that can outperform inflation and the exchange rate. MTN will probably be able to give you that, but we'll come back to that later. So these are the rates you see today. We are assuming that because you are going to travel after paying for your COVID test and all of that, you will buy your official money, official transactions at 411, but that's not going to come to you that way. FX is 411, 40% of transactions. Parallel market is 502, at 30% of your transactions. Then your tickets are at 420, but that will not last for too long before it changes, because the ticket industry is in turmoil. They are giving discounts, but do not count on it. If you can buy your tickets forward, buy it forward. So this is inflation trajectory. Inflation, all of you investors in this audience are saying, look, the NBS is saying that inflation has declined. But when I went to buy rice last week, the price of rice was up compared to last year by God knows how much. When I went to buy pepper, when I went to buy tomatoes, the same thing. When I went to buy milk, it was even worse. When I tried to buy Coca-Cola, so everything has spiked. Why is the NBS now saying that inflation has tapered? First thing, inflation does not, a decline in inflation doesn't mean prices have come down. It only means that the rate of increase of prices has slowed. Secondly, the basket has not been reconstituted, has not been recomposed or reconstituted or reweighted since 2009. Normally you do it every 5 years. Therefore, it is overdue for for reconstitution. So that is something that, but the other thing is that at the time, in April and May last year, when, because you are comparing the basket of goods and the price of the basket between April and May last year and April and May this year. April and May, I think it was March 31st that Buhari announced the lockdown, and there was a suspension of clearing for 14 days, and then the clearing was open, the banks were shut, the markets were closed, people could not travel out of state, and therefore, in April, May last year, I do not know which enumerator and how I could have telepathically found out what the price of any basket, because the market was closed, the baskets were not there. And so if you are comparing the price of goods in May this year with a basket of goods that didn't exist in 2020, it's a difficult comparison to make. However, by June, July, we have started opening up. There was temporary interstate travel and all sorts of things. So, and the markets are started opening up for limited periods. So when I would rather wait and see what the June inflation year on year is before I can make a judgment. For now, I think that judgments on year inflation can only be at best guesstimates or speculative. Now, but what is important here? The blue line here shows you what the treasury rates were in 2020. The amber line here, the brown line here, is showing you what is in 2021. In other words, you are getting a higher return on your treasury bills today, 364-day treasury bills, that are sharply higher than last year. So what are you doing? Some of you are buying treasury bills. Some of you are using treasury bills to benchmark your dividend payout. So let's move very quickly. The growth, GDP growth is important, but not so important to you investors. But the truth is that if the economy is not growing, every other thing will suffer. So you can't ignore it, even though it sounds like Greek. But what do we see? We think that this year, all things being equal, the GDP will grow by 2.5% according to the World Bank and IMF. However, some more conservative people are saying we will not get 2.5. I've read closely in the last 1 week, and I'm concerned that there could be a second or third wave of coronavirus it's already happening in Africa. So we've seen it, Kenya, Uganda, South Africa has locked down again. Australia has locked down. Vietnam has locked down again, in spite of the fact that they've done vaccinations. But here's the problem. Nigeria has vaccinated less than 2% of its population. And therefore, anything is possible. However, because the bulk of our population are below 15 and 16, and they don't, even if they get sick, they don't show symptoms, the population of Nigerians that are vulnerable to these things are not more than maybe 50 or 60 million people. Having said that, Nigeria announced yesterday that they've purchased Johnson & Johnson vaccinations and that they will be here, and that's a one-shot one. They'll be here in September. So the number of people that are left in September or are alive in September in Nigeria to take it becomes the issue. So that's one thing that we have to concern about. External reserves, again, this is the umbrella you need when it's raining. But right now it's raining cats and dogs, so we need to use part of the reserves to deal with that. Now it's 33.5 unencumbered reserves. This is a gross moving 30-day average. The unencumbered net reserves, we do not know what it is, but we just have to hope that it's not too low. External borrowing, yes, we are going to raise $3 billion soon, and we'll raise some money from the World Bank, and that should be able to cover us until the oil price begins to filter in. What are we going to see? The IMF is saying that GDP will rebound. Fuel subsidy remains a major cause for concern. And you said yesterday, I think I've heard that before Friday, in the next 2-3 days, the PIB will be passed. But anyway, we'll see that. And inside the PIB is a clause that says that downstream deregulation is now a law. And any government that does not, that subsidize petroleum products will be breaking the law. Okay. These are some policy pronouncements that are concerned. Daily petrol consumption, 102 million liters. You and I know that that is not correct. That means there's massive smuggling. At best, in a good day, we'll be lucky to consume 40 million liters. So what's happening there? In between crossing the border and having bonfires and killing people, this is what's going on. NNPC to acquire stake in 6 private refineries, including that of Dangote. So hopefully that will guarantee us domestic refining in the next year. The petroleum industry bill will pass this week, and petroleum subsidies are now about 6 billion naira daily, about 1.9 trillion naira a year. The Minister of Finance and Planning was on BBC Ad Talk. She's believing that we will grow at about 3%, and borrowing is necessary for security, healthcare, and infrastructure. We are borrowing for vaccines, but vaccines are also available for free if you lobby. So we'll see what happens. Debt service to export ratio is up to 112%. So we are spending almost all our exports earnings to service debt. Debt to GDP ratio is more modest at 16%. True value of Naira, according to the central bank governor, is between 430 and 440. And we'll see how that plays out. The central bank governor says that First Bank is systemically important bank, and therefore it cannot be allowed to fail. So if you have FBN holdings in your portfolio, you shouldn't lose any sleep at all. He also mentioned the fact that that there'll be need for backward integration and support for those who are providing the support, those who are investing in domestic capacity. He did also say that even though the NPLs are higher than the maximum required, higher than the required level, but he's confident that the banks are well capitalized and that the risk management of the banking system is solid and strong enough. You won't see this in this slide, but when we change the slides, I will give you an update on that. The Minister of Power talked about another electricity tariff hike, which is necessary and will happen first week in July. So first week in July is this weekend. So we should see what happens. So impact of all of this is that there's a fall in disposable income, fall in immediate aggregate consumption, and when consumption falls, the revenues of companies will fall. But because savings had fallen earlier, but is now beginning to increase because interest rates are increasing, we think that planned savings will increase and planned investment will increase. So, and that is what you see in the next set of charts under there. So, you and I are hypothetical investors, and assuming that our risk and fear and greed are within reason, this is what we are going to be investing in. In Q2, if you invested in US equities, you got 7%, 7.39% return. And so if you invested in Naira, you got -7. If you invested in dollars, you got +7. So you're 14% ahead of your Naira compatriot. But not only that, the Naira lost against the dollar about almost 41%. So you add 41% to that 7%, if you invested in dollars, you are actually about almost 60% ahead of your, if not more, of your Naira colleague. Q2, like I said, Naira, the equity market lost -3, but now it's -7. Treasury bills, you got 2.5. Real estate, you got like 10%. And in Bitcoin, you lost 41%. That's what you got. Now, if you took 10 million Naira now and put that in, your return was almost, how would I put it? Almost 57. You got a return of about almost 57,000 Naira, or no, about 57%, because you had I don't know how this calculation is done, but anyway, because you lost 41% on Bitcoin, if you didn't do Bitcoin, you would have gotten much more. But Bitcoin, again, this is what happened to you. So they lost on cryptocurrency. Now, conservative portfolio means that you got 484,000 naira instead of on 10 million naira, which is good because 10% of 10 million naira is 1 million naira. So you got 5% return in 3 months. So if you did that, I repeated yourself, so you got 5% in 3 months times 4, you got 20% return. 71% of portfolio invested in less risky assets. Real estate is doing well now because of urbanization and strong corporate demand. So if you had a risk-averse portfolio, you don't no risk. You didn't invest in Bitcoin. You invested in U.S. equities. You invested in Nigerian equities. You invested in treasury bills. You invested in real estate. You would have gotten 281,000 naira, 2.8% on 10 million naira. But you're okay. So stock market volatility will persist as yield and sentiment is soft. So far, all-share index, we said it already, and market cap is down by 4%. Sectors that are losing are all-share index, insurance, banking, industrials and consumer goods are doing well. Oil and gas is doing well, but I will be very careful about oil and gas. AXA Mansard was by sale of custodian and AXA Mansard, that's what happened. So for Q3, we expect mixed performance, corporate earnings. So you will see that, like I said, it's Dangote, MTN, and others, but you have to be very selective in determining a portfolio. Sectoral look, banking, banks are funding their portfolio with 22-23% money and they're getting 5% return. So your Q2 numbers are going to be bad. Also, scarcity of forex is hurting them, and competition from fintechs and telcos. So the banks are not going to do so well in Q2, but will stabilize in Q3. The banking industry, again, I think the central bank made a statement yesterday that all those who took money from anchor borrowers should start repaying, because apparently the anchor borrowers, people took their money and took off. They planted some seeds, and some of them married new wives and all of that. So again, they're asking them, and the wives do not serve as collateral, so they will have to look for something else to source of repayment. Cannot be the children or the wives. Now, FMCGs, rising inflation contracts, and petrol increase prices inevitable. Electricity tariff, forex demand, reduced forex demand, and higher inflation are eroding purchasing power. So, increased cost of raw materials and cross elasticity is pushing up prices. So, FMCGs, those that can reprice, those that can pass on their cost efficiencies to the market will benefit. So, you have to be looking out for the Nestle's and some of the flour mills of Nigeria and so on. Oil and gas, PIB passed, but again, look out, when I say oil and gas, look out for fertilizer, look out for petrochemicals, look out for refined products, and then those who are in gas, maybe Seplat, I don't know. So, outlook for Q3, mixed performance, cost optimization will lead to. And interest rate risk is high, because when interest rates increase, bank loans are in default, and therefore you will have deterioration in quality of portfolios. These are other risks that have been mentioned. So where will you invest now? US equities look good. Nigerian equities, maybe 10%. Treasury bills for 1 year maturity and above, 50%. Real estate, 10%. So if you are looking at banking, we're looking at GT, Zenith, and Access, and some of the smaller stocks. If you're looking at ICT, MTN, I will take a little bit of Airtel, where Airtel is very highly priced. So you can see MTN has a price earning ratio of 14.57 and a dividend yield of about 6%. Okay, so something to look at, but don't forget MTN is going to sell, MTN Group is going to sell another 14% of their stocks this year. So the price could come down. FMCG look at flour mills, industrials and conglomerate look at Dangote cement, and then oil look at Seplat. And then risks, yes, and I'm just going to skip over those without wasting too much time because I'm out of time. Some things that are unlikely, but to bear in mind, will peace return to northeast Nigeria very quickly? Will Biafran separatism lead to a return to civil war? No. Will there be a military coup? Not at all. Will there be widespread outbreak of coronavirus the government cannot handle? We think it's low because the vaccines will counter that, but we never know. That will the president be able to reduce corruption? Not likely. Regulations change abruptly? Yes, it will happen. Nigeria succeeds in diversifying away from oil? Not likely in the short run. Prolonged recession based on high inflation? Not likely now. Oil prices fall sharply to $40 a barrel? No, we don't think that will happen. CBN to reimpose controls? We don't think that will happen. Federal government to adopt permanently restrictive attitude towards regional trade? Not likely. Banking sector undergoes another crisis? Possible but not likely. New railways will relieve transport bottlenecks? Low, but the impact is quite high. We've seen that already in Lagos-Ibadan rail. And power supply problems improve drastically? Very unlikely. We are on generator this morning. So the other things which I'm just going to leave, sorry. Summary and conclusion. Sustained economic recovery in Q2 and Q3 will taper down. Inflation risk tilted to the upside. Oil prices will stay elevated for now. Gross external reserves depletion will slow, but dollar cash inflow will increase because of oil prices. Naira will appreciate to about 490, maybe 485 after touching 500, 502, 510 and back again. Speculators will adjust and power market premium will begin to decline. Thank you very much, ladies and gentlemen.
Thank you very much, Bismarck. We're very grateful for your insightful presentation. It's always very educating. So we have a few questions here, and one of the questions is this. In terms of investments, people are always concerned about, the value of the Naira, and some people just want to they don't understand, is it going to get better? It's not going to get better. Maybe I should just buy dollars and keep and be watching. In fact, I know a couple of people who do this. What is your response to this? People who just want to, with any savings they have, rather than invest, they just want to buy dollars and just hold.
And let me say that buying dollars and holding, you are actually calling on a kidnapper to pick you up. But first of all, the dollar in your house is not invested. If you are buying dollars to invest and go into the US equities or US bond market, then it makes sense. But that's why I went to, the question I think you're asking is that, should I buy dollars, invest dollars, rather than invest in Naira? I would say that depends on what investment you are making in Naira. But definitely, the rate of inflation in America at highest point will be 4 or 5%, maybe that, but 2.5. The return you're getting in the US equity market is probably about almost 12 to 14 or 15%. Invest in Naira, inflation is 18%. The return you're getting in treasury bills is about 2.5, maybe 3. At best, you get 5 or 6%. Therefore, it's a total. So, therefore, you have to look at those stocks that will do good for you. And you are looking at Zenith Bank, you're looking at Access, looking at GT, you are looking at MTN, you are looking at Farmers of Nigeria, you are looking at Dangote Cement, and those ones will give you a return that will compensate you without exposing you to too much risk. That was the thrust of this presentation today in our quarterly review. Obviously, the clients of Alpha Morgan are sophisticated clients who have some wealth and want to preserve that wealth and are interested in the value of their portfolios at the end of the quarter and the direction of policy at the beginning of the quarter. Thank you.
What Another question. Yeah, go ahead.
I have another question here, and it says, in terms of what has happened between our last webinar and now, what do you think would be the likely impact of the security situation if it is not addressed?
Well, I think that's a doomsday scenario. First and foremost, attempts have been made to address the security situation, but you can only solve a problem that you understand. Our security operatives are used to conventional warfare. They were trained and groomed when the enemy is Cameroon. They have 500 tanks. They have 70 aircraft. They have so many naval ships. We have our own. We will go through Bonny and capture them here, and we do that. When we overrun them, they will surrender and the war will be over. We'll sign a peace treaty. That was how wars were fought over the last couple of centuries. But nobody, from the day we had 9/11, when people entered an aircraft and launched it into buildings, this asymmetric warfare has become an insurgency, and terrorism has become an act of war. And therefore, first of all, you have to understand it. Secondly, you have to have superior knowledge in terms of intelligence. And thirdly, it's not a one-dimensional solution. You have to be able to engage them. So nobody, we talk about Boko Haram, and what does Boko Haram want? What does ISWAP want? What does, so you have got to be able to engage them and also show superior power. I think that is the stark reality that the Nigerian establishment, when I say establishment, all of us here are coming to terms with. We are still talking easily here. If anybody was to blow up the Falamo Bridge today, let us assume, and God forbid it happens. If that happens today, or the Bonicam Bridge, there will be a complete breakdown of everything. Nigeria will come to a halt because the bulk of the Nigerian activity and production takes place in the Lagos area. Mainly, I'm told that 26% of the petrol sold in Lagos is sold in Lekki Phase 1 Uniru axis. 26%. What does that tell you? How many people live there compared to the income? So, in other words, 1/4 of the vehicles are fuel there, and that at least 25% of the activity in Lagos, which represents almost 25% of the activity in the whole of Nigeria, is in Lekki alone. I want you to understand that. So 25% or 25% of the whole is in that axis. So if anything, so it means that there can be bombs in Warri or Maiduguri or Sokoto. Until it gets to the heart, the nucleus of the economy, you will not feel it that much. But it cannot continue. Something has to be done, and something is being done, and hopefully we'll see the results. Because to be aware of the problem is 50% of the solution. Then doing something about it is another pattern. Thank you.
All right. Tai Efo is asking, it says, Nigerian Naira seems to be very prone to speculation in short selling. What can be done to improve monitoring, weighting off speculation, and making the Naira better managed?
Well, thank you. The assumption in your question is that speculators always make money. Speculators have lost money big time at times. So speculation itself is a job. You need capital. You need the brains. More than anything else, you need the balls to be able to fight it, right? Not everybody has it. Even if you have $100,000 today, you're not going to stick it. First of all, you don't know the drivers of the market value. And I'm sure you do not have the courage to even go into that market and stick yourself there. It's not the same thing as Niger bet and all this kind of thing, but it is to a large extent. If you bet and you lose, and almost everybody, the odds yesterday that France will beat Switzerland were so high, right? But look at what happened. In the end, Switzerland beat France on penalties. So if you want to go into the business of speculation and betting, be my guest. So I don't think it should be the business of government or central bank to stop speculators. Because when speculators lose money, they don't come to the central bank and beg for subsidies. They lick their wounds. So I think that's what's going to happen. Now, coming back to the question of whether the reason why there's a problem here is that fair value of the currency, the deviation from the fair value is what leads to speculation. Now, the currency itself